Welcome to TradeTheNBI.com. This is Jonas Reporters for Halloween, October 31st. And well, we're about to end what was a pretty spectacular month. Just the ranges have been phenomenal and super exciting. It's been really a fantastic ride all the way from that peak move that we could recognize that was taking place at the DOC spread that took place right here just before the breakdown. And then, boom, the collapse below the ABM, and then some of these moves where the potential for a start of a buy came, but pretty much ended really fast. Too much damage from the DOC within this configuration, and then, boom, we made lower lows. Things have improved. We reached these negative 20 areas, which I usually look to see for automatic bounces, and boy, did we get a strong bounce. We went all the way from 26 to 2,700 on the ES for the S&P in literally one day, for the most part. It's crazy. We reached that bottom peak yesterday, just a little bit. Well, yeah, that was on Thursday. Not Thursday. I keep thinking just because it's 31st should be the end of the week. It's not. We're right in the middle of the week, Wednesday. So that was Monday, and then boom, we retraced that full, and this happens so many times I get tired of even talking about it because we could see where it was happening. This is why I put it on there. It's like, okay, we had this target, we had the original one at the 35, which was really the stronger of the two, and that kind of carry through just caused automatic buy reaction from the big players, and when they get going, look out. You don't want to, that's a freight train that just will not stop, and no reason to get in front of it unless you want to get run over. Yeah, assuming you're short. You want to just go with where they're going, and we could see that all from the intraday action, because even as much as you were up 30, down 10, 15, 20, back up again, the roller coaster has been rather clean. The momentum of the moves, pretty straightforward. It's usually when we get that choppy back and forth intraday that you know that there's a lot of indecision or the need for big accumulation. But with the amount of volume that we're seeing, not necessarily. When I show the 5K chart, you'll see it. So NQ approaching that 23%. There's always going to be resistance, and without a clean buy, this is where you get some of these knee-jerk fast short cover, and you've got to find new buyers. And the question is, are they there? Is the euro getting close to the previous lows that took place back in August? Break of that really would signify that some serious players have given up. But this fantasy of growth in the EU was always ridiculous, and I kind of mocked it more than one time or another. And of course, then they just come out with and said, of course, there's no growth in the EU. Big surprise. But what this really does is it hurts earnings for the S&P. Now, with the market gyration, I think most of it we talked about before. This does put a little downside pressure on the ES, but the worst part of it is the election situation in the U.S. is causing most of the dynamic. Really hard to gauge the clarity. Kind of stuck for the best way to approach that, because if you have a clear idea who's going to win and you're certain of it, then you can position clearly in a direction. But if there's a lot of ambiguity and a lot of real uncertainty in whether or not you can trust what you're getting, and this coming off 2016 where the polls and things were so wrong, it's created a lot of doubt. And that doubt leads to confusion, and this is what we're seeing from that cyclical back and forth. I mean, we're getting weakness in bonds, we're getting weakness in oil, we're getting weakness in gold across the. That's just not normal, because when one counters the other, you've got to have a defense move one way or another, and here everybody is seeing the exact same reaction both ways. Now, the market rising can give justification to those moving. Does that mean we've got a solidification? Well, you can't really say that, because look at this. This is the previous day marker line right here. Here's the current one. So here was the low of 26, which was just before the close of the market. And then you have that much volume back and forth but with a slight constant rise in the lows. I mean, when you had this from this low peak, this one was a little bit lower, but not significantly lower. And I got tired of putting all the different short booms and everything after a while, because it just became so blatant. We had the big run up in the morning, retraced, filled in the positive extremes that came in through there, and then we popped up. Now, do we still have some positive extremes? Yeah, we have this little cycle all the way down here that needs it. The mid-range ones all got filled, and some people say, well, it's 100 points away. Yeah, well, look at how many hundreds. We were 300 points away on the daily for that, and it's still filled. So I'm going to expand this now because it gets impossible to see that tight. And we can start with this little end run here, because this is interesting, and it's worth noting. While we had some of these breakdown setups, we ended up with what formerly was the white candle, the orange right here, as it was breaking down. You see the nice little L? And that's going to appear, and what it'll be in the paint bar for the DeoCon paint. And that's interesting because I'm running on top of here the GAM function paint bar, but by adding the DOC paint, it gives me the letters and the pivot markers, and there's going to be the input function. You can just go to the inputs, and if you want to, it'll just say for on and off text for the paint bar, and that would remove them if you don't want to see them. It's the same with the ranges for the Morganachis. So that makes it easy. But here you can see clearly the higher pivot, and boom, tip of the orange, and came up pretty fast, and then pretty much you had that close off with the orange popping above, and still went a little bit higher because it reproduced a new configuration right there, but then rejected it like instantly. And this is always a tougher one when you get that kind of a situation where you got a rising red, it looks like it's good, and then boom, you get an immediate reversal. And they just sometimes change direction. But what it did was came back down, and this was right here where the new peak started. And in this case, you didn't get the orange dip below. So for me, it just it's decent, but usually they're problematic. They don't tend to have a clear upward trajectory. And you can see this is what happened. You kept coming back down, filling, coming back down, filling. And then it was this much higher P3 that was right about at the 50% that was much cleaner, as you ended up with the steel crossing above the orange, and the improvement literally was within the next part. And even that still took some heat going back and forth, and then you ended up with cyan under red. And this is something I look for. You can see all these little spikes that you might think of as short runs, and if you're playing them just for retraces of the positive extreme, great. You can see that they all tend to get that fill back in place, but you can see there's a couple that I just like to do that new parallel, still need to get retraced from within there. And what I always look for in those particular cases, when we're starting to see a run that's producing a bunch of these little positives, particularly with gold, and that the fact that they've stayed gold lets you know that you're getting a continual rise. And if I see rising blue in particular, I'm not too keen to short that. What I like to see is when the blue flattens out or at any point begins to. So like right now, when we're starting to see flattening of the blue line right up in here, these kind of shorts will become more interesting to me, because when you have that upward momentum, you're sort of fighting basically the trend. And it's not that you can't do it, it's just that it's a little bit clearer because you're going to get that rollover before a clean short. Like in this particular case right here, before this collapse, you could see the blue had already started to fall even before price did, pre-warned. So just something to note. And not to mention you have cyan under red for the most part, but you can see how that impact of these dramatic moves, that's all good and dandy. You know that it's not going to be that long lasting because you didn't get green breaking below red. You did get a rollover of red, and that's all it produced was literally just filled the positive extreme. So if your range between those is reasonable, then it's worth doing. So in this particular case, the low of 67, and if you're up here at 73 or 74, yeah, but you just got to be prepared that that's your number, and if you try to stretch it for more, you're not likely to get it. And so it's just something worth looking at from a broader context that will keep you in better runs. I don't have a problem with it because for me, if I've shorted up at that 74, come down and fill it there, I can wait until I have a confirmed buy, or I can just re-enter back from the exit, and then I really didn't face any of the heat, which is a lot of times what I'll do if I'm actively watching it. Otherwise, I've got myself a stop that's set usually at my 50% or break even, depending on where I've entered from my initial buy setup. Particularly after I've already seen 50% retrace, like from this move, the 50% to the 100, coming back down. So that little short distance right there fills it. So then, for me, I'll put a stop just below and trail from where I see algo activities, and it really becomes very effective because you don't get caught in a lot of the noise and back and forth. And literally, if you look at the green ABM and follow it through here, it's never even been touched or even even breached in any way, shape, or form, and it's usually enough to keep you out of the action. So all in all, good stuff. I'll be sending out the indicators probably early market time. That way you'll have them and be able to add them either after or, probably don't want to do it during the market, but certainly right after, you'll be able to just add it right back in place. As always, though, I will put up relevant new special setups on the Skype chat. Trade well. We'll talk again later. We'll start another exciting month. I think start of November should be pretty wild as well. So looking forward to that. So don't miss out.